In this lesson, we will learn about Article 4 of DORA. So this article plays a foundational role in shaping how financial entities manage their information and communication technology risks, or ICT risks. Imagine a well-orchestrated symphony where every musician knows their part and the conductor leads with precision. That's what governance and organization are all about in the context of financial entities. So first part of this article lays the groundwork by emphasizing the need for internal governance and control frameworks. Think of this as the rules and guidelines that ensure everyone plays in harmony, like in orchestra. Financial entities must ensure effective and prudent management of all ICT risks. It's like having a detailed music sheet that guides every musician's performance. So we have a conductor, but every musician have his own music sheet, which also helps him to have great performance. So why it is vital to have internal governance and control frameworks in managing ICT risks? So internal governance and control frameworks are vital in managing ICT risks because they establish a structured and coordinated approach to ensure that risks are identified and assessed and managed effectively. These frameworks act as a guiding music sheet, allowing all stakeholders to be aligned and understand their roles and responsibilities. So we want that they are all aligned, all included parties, all stakeholders, and that they understand their role and responsibilities. So together, they create a cohesive environment where risks are minimized and resources are utilized efficiently. That's the point. Then we have responsibilities of the management body. So this is the second part. So this part is like we are examining the conductor's role in the symphony. The management body of the financial entity has a series of crucial responsibilities. First thing we have here, financial responsibility for managing ICT risks. They are the ultimate guardians of the financial entity's ICT risks. So this management body, like the captain of a ship. Then they need to set clear roles. So they are setting clear roles. Because defining roles and responsibilities for ICT related functions is similar to assigning parts to musicians in an orchestra. It's similar. You are giving them instructions what to do. Then we have determining risk tolerance level. So they must establish the acceptable level of ICT risks. Just as a conductor in symphony sets the tempo. So what is the level of risk that is acceptable? After we will talk about accepting risks and determining the level of acceptability, so we will not go now into this. Then we have overseeing business continuity and disaster recovery. This involves approving, overseeing, and reviewing the financial entity's plans, like rehearsing for a big performance. Also, it is mentioned their responsibility is managing ICT audits. So they must approve and review ICT audit plans, like fine-tuning the instruments in the orchestra. Of course, they are also there for financial allocating budget. This includes assigning the budget to fulfill the entity's digital operational resilience needs. similar to investing in high-quality instruments. So they need to give money and approve budget that this process will work correctly. Then we have managing third-party service providers. So they must approve and review policies on the use of external ICT services. Like in our example, it's like selecting some guest performers. But in the case of a company, it's selecting external ICT services and approving them. Then we have understanding incidents. They need to be informed about ICT-related incidents and their impact. So this is similar, like in our example, understanding how a missed note might affect the performance. Just imagine there is a beautiful orchestra symphony and somebody misses a note. Probably people will hear it and it will maybe even ruin the symphony. So, how do all these responsibilities ensure the smooth functioning of the financial entity's ICT operations? Think about it. So, the responsibilities of the management body, we said, are similar to a conductor in an orchestra, to provide direction, oversight, and control over ICT operations. By defining roles, setting risk tolerance levels, managing audits, allocating budgets, and overseeing third-party providers, the management body creates an environment where ICT operations can function smoothly. It ensures that every part of the operation is tuned and ready to perform how it's intended, thereby minimizing disruptions and, of course, enhancing resilience. There is also a section after that emphasizes the need for financial entities other than micro enterprises to establish a role or designate a senior manager to oversee arrangements with third-party service providers. It's like having a stage manager to coordinate with guest musicians. So somebody needs to be responsible for third-party service providers, and this is that person. This applies to everyone except micro enterprises. Finally, the last section highlights the importance of ongoing training for members of the management body. So what that means? That means that they must gain and maintain sufficient knowledge to understand and assess ICT risks. Like musicians need to practice. They need to practice to perfect the art of music. So why is continuous training essential for management body in understanding the ICT risks? It is essential because ICT risks evolve with changes in technology and the threat landscape. They are evolving all the time. So like musicians practicing to perfect their art, the management body must continually update its knowledge and skills to understand and assess these evolving risks. Training helps the management body to recognize new threats, adapt new methodologies, and refine maybe strategies, so that they ensure that they stay in tune with the ever-changing world of ICT. This preparedness is vital for making informed decisions and maintaining robust risk management practices. Thank you very much for listening about Article 4, and until our next lesson, bye.